Hello, it is December 22, 2023. This will be my last presentation for the year of 2023. And let's discuss the last 5 trading days of 2023 with a 2024 positioning outlook. Okay, let's share my screen. Wait. Okay, it is a Christmas edition. We are in the midst of a Santa rally, and the market in the US continues to go to all time highs. Well, some stocks are trading at all time highs, not all stocks are, but there are a lot of strong sectors. We should elaborate. Strong sectors are technology stocks, consumer discretionary names, housing related names, semiconductors and AI, communication stocks, and cybersecurity names. If you take a look just in the sector ETFs, this is your US home construction ETF trading at all time highs. This is due to the fact that a lot of boomers had a lot of cash, and we saw that a lot of these were actually being used to build homes and not to finance with any interest rates. Therefore, higher interest rates did not deter any of these people to continue building homes. Thus, home builder stocks like PHM, Port Group, Lennar, KB Homes, these stocks all traded near highs and all-time highs. And so you're seeing the home construction ETF are actually closing the year very, very strongly, starting from $50 all the way to 100 or 100% up for the home construction ETF. This is the semiconductor index. Of course, everyone has heard about AI, and semiconductor chips were actually the ones that are producing all these GPUs, specifically NVIDIA, AMD, and Avgo have actually doubled, tripled for the year. You're seeing Philadelphia Semiconductor Index here at about 2,600, trade as much as 4,100, and as a group, they're trading near their highs. This is your consumer discretionary stocks, and consumer discretionary stocks, lo and behold, a lot of people still manage to spend. You've seen companies like Lululemon and Booking.com, which are essentially travel related names and spending apparel names, still trading at all time highs. Even Chipotle is trading at all time highs. So you get actually even Amazon and Tesla also trading not necessarily at their all time high, but also trading near their highs. So this consumer discretionary, a lot of them have reversed up to upwards. You're seeing that this has rallied from 120 all the way to 180 or 50% up for the year for consumer discretionary ETF. This year, technology stocks being led mostly by Apple and Microsoft. And you're seeing that XLK is trading at all-time highs. It's trading here at 191, higher than 2022 peak. And it's actually leading the way with Microsoft, especially generative AI, leading the way higher. So as long as Microsoft continues higher, it looks like generative AI and technology stocks are trying to go higher and higher as time goes by. Same thing with companies like Adobe, following with higher highs and higher moves. You're seeing cybersecurity stocks like Palo Alto Network, Zscaler, specifically CrowdStrike. All of these names are reversing and have gone up. You're seeing these names, specifically Palo Alto Network, trading at all-time highs, and cybersecurity ETF is trading higher as well. You're seeing this bottom here at about $42, and it's now trading at $60 for the year, ending the year high. So even if there will be profit taking as the festive mood of the market is going on, it is highly likely that any corrections will just be small, as profit taking usually can be 5% or 10% down. And these stocks can fall, of course, after a magnitude rally like this. Take a look at communication services sector. This has been a very, very strong year for Meta, aka Facebook. You saw the shares go triple from about 80 plus dollars all the way to 340, $50. It's actually up from 44 as a group all the way to 72. XLC primarily led really with Meta, although Google also, of course, rallied as well, along with the entire Magnificent Seven. So will the Grinch steal Christmas? Let's take a look. There is a Grinch. As you can see, just today, Chinese stocks actually fell down with the largest drop for Tencent, given that Tencent is one of the largest conglomerates in China. Hang Seng Index is actually down for the year, and it's actually trading near their 52-week lows. Their 52-week range is 15,972. It's closing today at 16,340. China just unveiled a raft of new measures to rein in spending and content in online games. Tencent is shedding $72 billion dollars in a single day as China is unveiling latest gaming curbs, dropping 12%. On December 22, as in today, Friday, Beijing's top gaming regulator published draft rules broadly designed to clamp down on practices, encouraging players to spend more money and time online. So, as you can see, China does not want their Chinese people to spend money on video games. So, if this were to be true and more elaborate rules do happen, Tencent will actually lose a lot of money in the process. Tencent slid as much as 16%, the biggest intraday fall since 2008. Smaller rival NetEase dived 28% since this is the revenue generator or driver for all of them. Nexon, which derives a chunk of their revenue from China, fell 8%. Bilibili, a social media service popular with gamers, also fell 6%. The government now wants to set a cap on how much money each player can spend within a title according to the draft. So, this could be a very elaborate scheme by the Chinese government to enable their Chinese population to stop gaming as a whole. Whether this will deter the entire gaming industry, this can actually have a huge impact on the entire semiconductor sector. So, watch out for these types of Grinches that would happen, that would steal Christmas in the last 5 trading days, or AKA this Santa Claus rally. NetEase is down 25% for a single day. Tencent is down 12% a single day with very huge volumes. These are $39 billion dollars of volume in a single day. And NetEase has 6 billion volume today. And these are market caps of the following. Tencent is at 2.6 trillion yuan. And you've got NetEase at 418 billion yuan. This is Tencent falling to a 52-week new low today after that draft rule happened. And you're seeing that Chinese stocks are still on an overall downtrend and has not really given any opportunities to any buyers to have any tantamount rally. We'll see whether 2024 bodes well, but these are Grinches happening in China as well as gaming related stocks or gaming peripheral that will also be like Microsoft could actually be affected, Sony, because a lot of their games will also not be able to be distributed in China because of this. Now, this year's biggest winners, we have to discuss about the biggest winners. You might be surprised, but the biggest winners does not necessarily have to have the biggest profits. This year's biggest winners are actually Carvana, a lot of short squeezes, right car, right price, financing made easy. You've got a firm. People were actually expecting that buy now, pay later firms will have a lot of delinquencies. Lo and behold, a firm ended up with higher partnerships. A firm just partnered with Walmart recently. A firm had good numbers and their delinquency is actually less than 3%. With the shares down 90% starting the year, a firm rebounded from $10 to as much as $50 or times 5. A few of the things that also rebounded pretty heavily was Coinbase. This stock went times 4 for the year. Future of money is here. A lot of people continue to still play and trade and invest in a lot of cryptocurrencies, specifically Bitcoin. You can see Coinbase actually managed to ride the roller coaster and triumphantly going up as most of their competition has closed down, such as FTX and their competition Binance is also closing down in the US. Marathon Digital adds Anchorage Digital Bank as a Bitcoin custodian. You're seeing Marathon Digital start acquiring more miners, Bitcoin mining sites, and it has been adding production and it has gone up as well with the Bitcoin rally. Of course, this year is not going to end without AI as a discussion. Palantir has been a very, very strong mover this year. Starting from as low as $7, this rallied as much as $21. AI powered operations for every decision. Yes, there is still a lot of profit taking in Palantir, but it seems like there are a lot of buyers as well if it dips near $14. Nvidia has been a very, very strong move for the year. Actually, it was Nvidia that really wrecked any AI bear. Nvidia actually closing near highs at about $480 this year. AMD also closing near highs at about $140 this year. Sorry, I'm getting a little bit of I'm a little bit sick actually, so that's why my voice is like this. And Yeah. Okay. Meta, of course, has done very well this year, and we can see that people are also aggressively looking into the VR glasses that they shared just a couple of months ago. If you've noticed, their partnership for Oculus glasses, so that one is getting a lot of raves. C3 AI, since the first half of the year was really all about AI, just for the namesake of AI, this one went from $12, $10 all the way to $50 times 5, then went down back to 23 after earnings didn't meet expectations, and so far it's just languishing here at about 23 to 32. So it looks like after some movements on AI, if they don't have a lot of big announcements or any earnings, they do actually die down. The hype also dies, but not for the likes of Nvidia, not yet. This is Palantir. You're seeing some profit taking already happening here at 21, but in fact, there's a lot of buyers here at 13, 14, and 15 so far. This is SMCI, another very strong mover for the year. And this went from $60 all the way to 340. So far, it's still trading near their highs, just like Nvidia trading near their highs. Marathon Digital has been an outperformer. You can see this one goes from $3 all the way to 25 times 8 already. Whether it continues going towards $30, it could be very, very frothy already. But so far, the Christmas Grinch has not yet arrived for Marathon Digital. This is Bitfarms, also rallied from the lows of about less than $1 and all the way towards $3. A lot of these Bitcoin miners are going up due to crypto still recovering. This is Valkyrie Bitcoin Miners ETF. Again, this ETF has gone very, very strongly this year from $4 all the way to $18, brought about by the likes of CleanSpark, Mara, Riot, and all these Bitcoin miners. This is CleanSpark. It rallied from as low as $2.50 all the way to $12 this year. So that's about times 5. Yes, this could continue going higher, but you've got resistances here at about $14 to speak of. Back holdings, these packs, which has relationships with Bitcoin, has also rallied pretty strongly with the advance of Bitcoin. Again, this has rallied from 70 cents to a dollar. However, these are penny stocks and should be seen more as speculative money entering into crypto-linked names. Top 10 holdings of WGMI or Valkyrie Bitcoin miners are CleanSpark, Mara, Iris Energy, Riot, Cypher Mining, Bitfarms, BitDigital, Nvidia, Hive, Hot Mining. And so you're seeing that all the money, because it's a very small fund, it's just a $25 million asset pool. Any passive money entering those funds are automatically getting in towards these stocks. And therefore, you're getting a lot of movements with a very small position through these people who are looking for crypto linked assets. So the fund is an exchange traded fund investing at least 80% into companies that derive at least 50% of revenue or profits from Bitcoin mining operations. Usually, Bitcoin mining operations are treated by the market as leverage products to play the Bitcoin ETF approval that's happening for next year. This is also a stock that has moved quite aggressively, which is Upstart. You see that this stock has gone from $10 all the way to $70. No earnings, so it crashed back towards 20 and then rallied from 20 back to 45. Lower highs, however, so there are possible Grinches this Christmas, even if these stocks have rallied pretty phenomenally for the year. They have rallied pretty strongly, and some people might be taking profits ahead of the festivities. This year also had a lot of bankruptcies, large fallouts, and memes. The current memes have been the current bankruptcies were WeWork, Bed Bath and Beyond, Farfetch, App Harvest. Just to name a few, there were a lot of bankruptcies this year. Of course, Signature Bank of New York, Silicon Valley Bank, you've got First Republic of California. They all filed for bankruptcy, leading to buyouts and back-term funding program, all happening in March 2023. There are already default risks for SunPower, going concern warnings, and so it is not yet out of the woods. You can see a lot of companies actually filing for bankruptcies as the year ends. Let's talk about positioning. Okay, positioning wise, wait up, wait, present. So, positioning wise, it looks like for 2023, the market has already decided the polls have definitely won. And so here at about 16,720, it's a matter really of just extensions going higher or whether there will be profit taking. You're already seeing some choppiness. And so from a positioning standpoint, we do expect that even if there will be some drops, it will be mitigated somewhere here at about 16,000 area. So you still have a lot of profit taking that could happen. You're already seeing it start. Apple has been profit taken from about $200 all the way towards 194 recently. Microsoft is still very strong. So if ever for the last 5 trading days of the year, we're just seeing a lot of profit taking. So you're seeing that people are just closing their positions ahead of the festivities for the year. This is Microsoft just consolidating. And as for Bitcoin, a lot of people are trading it still positively. There's not a lot of selling pressure, even as Bitcoin has rallied towards 45,000. So we're just really seeing that the last 5 trading days of the year are just going to be very low volume. The market is still positioned higher. As you can see, they are still of the view that January 2024 is still going to go higher towards 48 because the path of least resistance is still upwards. Things can change if this breaks below 40K, but as it is, people are still on the lookout for further rallies for the last 5 trading days of the year and perhaps for the first 2 weeks of January. So far, we should note that Chinese stocks are really dropping like no bottom. So from a positioning standpoint for 2024, it looks to be possible that from a risk reward standpoint, with yen trading at the lows here from October 31, 2022, starting at 17 or 18 tonight because of 10 cent dropping, you might actually see Chinese stocks today fall about 10% or more. And you might want to actually enter some of the largest companies in China, which is Alibaba and JD. So far, JD is still trading here at 25, 26, 27. So it's just trading here for 24. So from a positioning aspect, you might want to enter some JD for 2024. Also, some Chinese names like NIO actually got funded recently by Abu Dhabi with $2 billion of investment. So you might want to actually take a look on companies here after dropping 90%. Notice that this year's largest winners have come from companies that were also the largest losers last year. Take note that Meta was one of the largest losers last year. And companies like Magnificent Seven were also largest losers last year, specifically Netflix. So these companies which have had large losses like China, 90% down for the year for NEO, may actually start rebounding given there is a lot of flurry of investments from Abu Dhabi investors. So NEO here about $7, $8 might be tempting for those who want to get in on the action. Now, of course, we would want to still enter some small companies. Robinhood was something that we mentioned around December because Robinhood was trading at that time at about $8. So far, Robinhood has gone up all the way to $13. And for us, for those who are holding on to Robinhood, we will hold on. But for those who want to take profit, nothing wrong because at 13, that is also resistance. But with the market strength, it could go as much as 16 or 20. So that's a company that we would be okay to buy on dips should Robinhood go down near 10 below because Robinhood has $7 worth of cash. Okay, you've got a company like like Coinbase already trading near the top at about $170 today. So from a positioning aspect, it looks like people are just gonna start trimming their crypto related names. Coinbase has gone up and away because of the entire crypto space rallying. And you can see that Coinbase is still trading at 169. The last few resistances are still here at $200, but short-term tight stop here at 140. So these movements like Mara and Coinbase have been non-stop rallying ever since November. And you can see that is the biggest move for the year, same as for Affirm. We're watching for positions that could be reversed within the next year. And after dropping 90% down, notice a firm has gone from 10 to 50. But at 50, a firm can actually already profit take and might go down towards 40. So watch out for these types of names. We're trying to watch for potential reversal tops even on the last 5 days of the year, as these high flyers are already showing signs of weakness and some profit taking already happening. With video games actually dropping, be careful. Of course, people still love to own their Nvidia. We talked about Nvidia being a primary winner for the year, and it looks like Nvidia will be a primary winner still for next year. However, it is not highly likely that Nvidia will keep on going up and extending all the way without any significant choppiness. So the choppiness has already happened from 480 to 500, and whether it continues going up beyond all-time highs depends on whether this 450 is going to hold on. So far, there, if you recall, Nvidia had a very good earnings around just last year, around November. When was this? November 21. But the stock didn't actually go all-time highs. It's highly likely that the market who wants to enter all the AI have already gone in, and so Nvidia is just consolidating right here at the range from 400 to 500. Now, AMD has gone up because of their introduction of chips. And so far, as you can see, AMD has gone pretty stronger rather than NVIDIA. NVIDIA went from 400 to just 500, whereas this one went from 100 to 140. A lot of semiconductor stocks actually rallied more than NVIDIA, like Avgo and AMD rallied more. So far, these stocks, however, are already getting some signs of profit taking. So I think from a positioning aspect, the next 5 days to about 2 weeks, we're already seeing signs that people are already taking some profits ahead of the festivities, even before Christmas, even before the New Year. Some people are already trying to close their positions, flat it out, and go to cash. Of course, there's a risk that they will sell early on, but it looks like these people are already happy anyway with the gains that have been made, specifically for semiconductor names. Notice that these have gone more than 100% up. This started at about 500 and it's closing at about 1,127. You're seeing companies like consumer discretionary, as we said, doing well, all-time highs for CMG. Now, with the moves or the big profits already being made for actually the next 5 days does not really have much movement anymore because the biggest moves have already happened. I think that's the view. So the only positioning to be made is which companies have not yet made a big move for next year. And it looks like only a few companies are there left, no? So some of the big moves for 2024 that could happen would be the companies in the consumer staple that really just got demolished and killed. So one stock that we want to check out is Hormel Foods. Hormel Foods, which owns the likes of Spam, is a household reputational brand. You can see the stock is just trading back here at $30 and might actually enter into a consolidation and might rebound next year. Okay, you're also taking a look at companies in the mining space. Let's show to you the movement of gold. As you can see, gold stocks are actually not necessarily moving as much as gold is rallying here at $2,050. With gold prices already trading near their highs, trading towards all-time highs, it looks like gold miners still have some catching up to do, specifically Newmont Corp. So let's take a look at one of the largest companies in the world that has to do with gold and copper. You're seeing that Newmont is trying to make a catch up. As of November, this went from 32 to 41, 42. We think that there is more catching up to do towards $50. And take a look as well for companies like Barrick Gold. So Barrick Gold is also one of the largest companies in the world when it comes to gold. Also trying to make a catch up, rallied from October here at 14 and now trading at 18. But there's still ways for gold stocks to go rally given gold prices are actually trading higher. So this also happened no, when Bitcoin was going up. It took a while before Bitcoin miners went up. Notice that this is how Bitcoin is. It went from here, notice around October from 27, this rally towards 32, then 34. And here around November 3, Bitcoin was already trading at $34,000, but companies like Mara were still trading at about $10. So it's highly possible that there is a lag effect for some gold miners out there and even silver miners. And so for positioning wise for 2024, this one, no? So you can see that this started moving around November 16. When did that happen? Specifically on the euphoria of rate cuts. If you recall, even IWM or the small caps only started rebounding November 14, specifically November 14 here in this gap up. Ito. November 3, then there was also this gap up November 14. So some of the biggest moves that people were discussing was after hitting oversold for the Russell 2000, now you're hitting overbought in such a record time, no? Record time yan. In just about 2 months from about October 30 all the way to December. So we do expect that because of that very strong rally in just 2 months, Usually, what happens is you do have to have some pullbacks. So, not necessarily negating this big move higher, but so far, it looks to be more of a profit taking move. You've got a choppiness. The bulls would want some choppiness first before advancing higher for next 2024. Say it goes 210 or 220. So let's show to you the scenario path for 2024. Scenario path for 2024, everyone's discussing already that the Russell 2000 has some catching up to do against the Magnificent Seven. So when it comes to the Magnificent Seven, you all see Amazon still trading at highs, $150, 152. So people expect that most of these gains for Amazon, for Magnificent Seven, are likely to be tamer for next year. And which ones would be stronger for next year? People are still betting on the companies like Shopify. So Shopify actually did very well, a strong rebound this year from 25 all the way to 76. There was a strong move here on the sale of Flexport, and then more earnings and more advances further on. So far, Shopify seems to have only a resistance here at 83, which is 10% away, and then $100. So we see that people will actually naturally buy any dips of Shopify should it drop here at 60, and in fact, even here at 40. So we would expect for next year, people will continuously buy towards e-commerce, and Shopify would still be a top pick for next year. Of course, we like Shopify, so this was a company that we highlighted to be in the shopping list. Now, Square is also a company that we highlighted as one of our best picks for 2023. And we highlighted buying it every time it falls below 55. So from 55, this went all the way to $40. And we do expect that just because Square is hitting $80 doesn't mean that it will already be over. Square aka Block can actually hit $90 and it's still actually on the way up so far, V-shaped rally and a recovery for Square aka Block. And just like Affirm having done well for their PayPal, take note that Block owns Afterpay, which is like an Affirm but only in Canada. So there's actually a lot of leeway for Block to actually outperform for 2024. We'll see whether that happens. But this is a stock that we believe will have room to grow for next year. Of course, there are some opinions for next year's biggest companies like Disney. Let's talk a lot about Disney. Disney is a stock that we also highlighted as a quality name that has been sold off 2023 as a laggard. However, we said that even at 80 and 79 here, we continue to remain bullish, even if people have bought in at 90 or 100. So we continue to buy Walt Disney for the fact that it's in a transition year. A transition year means that Walt Disney will continue to have a few losses from their streaming division, and they are still selling their traditional networks. So we think that there will be, of course, resistances on Walt Disney here at about 120. You've got acquisitions that are gonna still be fixed, like the 20th Century Fox acquisition. So it's not gonna be just a fast leg up for Walt Disney. However, for those who are patient enough to look at the Walt Disney, we think that these have already been carving the lows. We've got activist investors already here. So limited downside for Walt Disney. Let's talk about companies that have massive large moves to the downside this year, which were Dollar Tree and Dollar General. Now, they have rebounded, but what we're seeing is that the poor consumers of America, which are the low income workers, continue to be still in a downtrend. So we would be cautious on retail stocks, even as Dollar Tree has rebounded from 104 to 140. Let's take a look at some of the big rebounds like real estate. Real estate XLRE has rebounded, as you can see, from $32 to 40. However, we are still going to be cautious for this because we think that the rallies are, yes, you've got an interest rate cut that will be very beneficial for real estate sector, but it is already being priced in as well here. Take note that companies like SPG and ARE, Simon Property Groups, these are commercial real estate that have rallied pretty strongly from 100 all the way to 144. We are going to be cautious on these types of names. Okay, so these have been very, very strong moves, even the likes of Wayfair and Zillow. So we prefer that these names will be bought, but they are, in our view, more like a cyclical play. So people would buy it and then sell it, just like what happened here in August. They bought it and then most likely they'll sell it again here. Same thing that will happen for Zillow. It's a buy and sell market for companies in the real estate space. So this is Zillow. This went from 34 all the way shooting up to 58. like a V-shaped rally. While people are very bullish on this real estate play or real estate sectors like Zillow, Open Door, Redfin, our view is actually to be careful on these names as we don't think that the crisis on commercial real estate is over. Now, for the banks, we really, really liked JP Morgan. And so when JP Morgan gave an entry point at about $140 around the September area, we did give a buy on JP Morgan. And so far, JP Morgan is trading near their all time highs. So I think that there is not much left to do for the rest of the year except to be waiting. Number one, if you're in cash, wait for the right entry because you've got a lot of overbought positions and resistances. You have very few pickings, like we said. Yes, you could have Disney. Yes, you could buy companies like in China if you're willing. Oh, I forgot to say, Young China is also very cheap here at about $40 below. So 40 to 36, we do believe that Chinese people will continue to eat KFC, and so here at these levels, at about 40 all the way to 34, we would see that opportunity as a buying theme. Okay? So we don't think that the Chinese government will actually interfere with Americans, with an American food company selling to Chinese people. Actually, in case Starbucks drops towards 75, that is also something that we are looking to buy for next year. Okay, so that's it. Thank you for watching for this last presentation for the year. Let's take a look for 2024 on how the markets will be. Looks like the market is pretty toppish, so don't get ahead of yourself in case you are trying to chase this rally. It's okay, just wait for your entries, and we'll see for next year's positions. Thank you very much.